Good evening, everyone. I'm CA Himanshu Preza, wishing everyone present here a very good evening. I qualified my CA in 2016 and I'm having 5.5 experience in banking sector. It gives me immense pleasure to welcome all the participants and all the speakers in today's virtual CPE meeting on technology as enabler of internal audit organized by Internal Audit Standards Board of India and hosted by Baroda branch of ICI. I will take the opportunity to call CA Rikin Patelji, the Secretary Baroda branch of ICI for their opening remarks.
Thank you, Himashi. Good evening to everyone. And I also welcome you all to this virtual meeting on technology as enabler of internal audit. Internal auditors are dealing with a lot of changes on account of global pandemic, growing number of stakeholder demands, rapidly changing business models, and risk landscape with shorter business time cycle. To overcome all these challenges, technology-enabled internal audit methods are becoming need of an hour. Business areas are becoming more technological driven and requires audited to be done by the methods and techniques which serves the purpose. To take us through, we have with us eminent faculties. So I'll request everyone to take maximum benefit of next few hours. Thank you. Back to Himashi.
Now I would like to welcome CA Vishal Doshi ji. Vishal Doshi ji is a Central Council member with 25 years of post-qualification experience. He is practicing chartered accountant in Baroda, heading the audit and assurance practice. He has been awarded Rashtrapati Scout Award by K.R. Narayana, Honorable President of India. He was appointed the expert member on the Board of Studies in Accounting and Financial Management. It's a privilege to call upon Mr. Vishal Doshi to share some pearls of wisdom.
Welcome, Vishal Bhai. Welcome to this August gallery. We are truly honored to have a person of your stature to address the Internal Audit Standard Board's conference. Please go ahead, sir.
Thank you very much. Very good evening to all. Central Council member Nandaji, who is also the chairman of the Internal Audit Standards Board, Rikin Patel, Secretary of Vadodara branch, our learned and eminent speakers for the day, CA Samit Sarafji, CA Milind Limayaji, and CA Manoj Agarwalji, moderator CA Himanshi, Secretary Artiji, Arunji, and all the distinguished participants and members. It is indeed an honor for us that we are having this tech-savvy internal audit webinar, I would say. And having it on virtual platform itself is the first step towards technology savviness. Friends, we are going to discuss some very, very important topics as far as internal audit is concerned. We have planning and internal audit 1.0 to 4.0, and finally smart internal auditing. Friends, internal audit is assuming a more and more importance by the day, and especially in the corporate world. When we look at it, the boards, I would say the independent directors more so, are relying more and more on the internal auditors to give their comfort with respect to the systems and controls and also the reporting that is being done. The regulators are also, I would say, going through a microscope as far as the internal audit is concerned, and so are the statutory auditors. What exactly as an internal auditor, I believe that is being looked out for. One, when we talk of the management, is what are the value additions that an internal auditor can do. Second is the effectiveness of the internal audit and also the systems in place, how effectively they are working or operating. Friends, the days are gone when we used to do vouching. Typically, ticking off each and every voucher with the books of account and finding out the internal controls and the systems. It's now moved from transaction-based to system-based auditing. And especially when we look at the scenario of work from home, the management, I also attend many audit committee meetings that the management is actually asking the internal auditors, that in this work from home environment, are the systems and processes robust enough to ensure the completeness and accuracy of the data, transactions, and everything. I feel in this scenario, internal audit by the day is assuming a larger than life role, a very important role. And I'm very happy that we have renowned and eminent speakers who would guide us through this process, led by the chairman Nandaji. So once again, I welcome you all and wish you a happy learning. Thank you.
So finally, I'm so glad that I got the opportunity to interact with Nanda ji. जब हम सीए क्लासेस में होते थे तो सुनते थे नंदा जी के बारे में बहुत कुछ, मतलब एक नाम होता था नंदा जी का. हमारे टीचर्स, हमारे फैकल्टीज हमें बताते थे कि आप सीए बन रहे हो ना, पता नहीं आपकी सीए की जर्नी कहाँ तक जाएगी, कहाँ तक नहीं जाएगी, अब नंदा जी से जरूर मिलना. आई डू रिमेम्बर हमारे फैकल्टी होते थे सीए अमन ओझा जी, तो उन्होंने जब नंदा जी का नाम बताया तो मन में क्यूरियोसिटी हुई कि कभी नंदा जी से फेस टू फेस मिलना होगा या कभी उनके बारे में सुनना होगा. तो नंदा जी से अपॉर्चुनिटी मिली. करनाल ब्रांच में एक छोटा सा इवेंट ऑर्गेनाइज किया, वहाँ पे नंदा जी आए. तो वहाँ पे जब वो खड़े होके बोल रहे थे नंदा जी स्टेज पर, तो उनका सुनना एक ऐसे ऑनर फील हो रहा था हम लोगों को. एंड नाउ I'm really feeling very glad. I can't express. And now I would like to welcome Honorable Chairman of Internal Audit Standard Board, ICI, C. Charanjot Singh Nanda ji. I don't think so कि उनका introduction we need to do, but still I will do a formal introduction. He was a member, he's a Central Council member, and he was also the member of Quality Review Board set up by Government of India. He was the chairman of Committee on Internal Audit of ICI and the chairman of Committee of Members in Industry of ICI. And he was the chairman of Women Members Empowerment Committee. He was vice chairman of Committee on the Public Finance and Government Accounting. He was also the member of CBE Advisory Committee on the Primary Market and Mutual Funds. Now I request respected Nanda ji to share their views with the participants and our guest speakers.
Thank you, Himanshi. Thank you for saying so many kind words about me. Ladies and gentlemen, I am truly honored to have my younger brother, CA Vishal Doshi from Baroda, a man who has come to the council with flying colors. A value addition like him will help the profession scale newer heights. His contributions are immense, and more importantly, his indulgence will ensure that all of us and the profession at large is placed at a very advantageous position. I also welcome the two speakers I can see here. I'm sorry, I'm in the institute and I have only my mobile because the institute Saturday evening it is totally closed. So I would welcome Mr. Samit Saraf, who would speak on a very pertinent topic, how to plan an internal audit. There is a saying that people never plan to fail, they generally fail to plan. So planning an internal audit will ultimately usher an era where you are able to envisage and create an impetus of what findings you need and what are the basic areas where you have to put more reliance. Very, very important topic which Samit Sarafji would take. The second speaker of the day is, I can see Mr. Milan Lama is smiling here, a great topic which would speak about evolution of internal audit. Evolution of internal audit from IA 1.0 to IA 4.0. I would like to just put across one small thing that on a daily basis, there are so many changes in internal audit. A person has to keep himself abreast and keep honed his technical skills so that he is able to effectively not only service his clients, but the audit committees, the boards. The responsibility of internal audit has increased manifold in this era. And we chartered accountants, particularly under the guidance of our institute and the board, Internal Audit Standard Board. I want to give a brief overview of the board. I want to tell you that this is the third year of the board, and for 3 years I was the chairman of the Internal Audit Standard Board. First year we did so many diverse programs. Second year we focused mainly on SMPs, and this year we have been focusing largely on technology as an enabler of internal audit process. You are aware that your institute, the Institute of Chartered Accountants of India, was set up by an Act of Parliament way back on 1st July 1949. When the most important document of the democracy, the Constitution, was not adopted. All of us are well aware that the Constitution to this great country was adopted on 26 January 1950. The pertinent question that arises is, what prompted the Constituent Assembly to set up an Institute of Chartered Accountants of India when its own democratic setup was not in place? The answer is very candid, very simple, very forthcoming. They were looking for a brand They were looking for a branded class of soldiers who could steer this country out of confusion. Ladies and gentlemen, here we are. The circumstances are not different even today. Today also the economy is on crossroads and we need to bail it out. We need to ensure that it sails out smoothly. So evolution of internal audit will largely speak on areas where focus has to be more prominent by practicing chartered accountants or chartered accountants in industry. Internal audit essentially is a management function. We have been growing largely, but we have to remember one very important thing, that you can have a large universe above. As said by Mr. Radhakrishnan, the first president of India. He said you can have a large universe expanded above, but your feet needs to be strongly embedded to the ground below. And when I speak this, I am reminded of a couplet which I would like to share with all of you. The couplet says, आसमां पे किसी के ठिकाने नहीं होते, आसमां पे किसी के ठिकाने नहीं होते, जो जमीन के नहीं होते वो कहीं के नहीं होते. You have to have yourself embedded, and from that background, from that foundation, you can grow and put your wings, extend your wings to larger perspective wherever you want to. And the third topic by C.A. Manoj Agarwal is on smart internal auditing. Yes, very, very important. Smart internal auditing would put us at a parlous where we understand how the work has to be done and how it has to be put into the right perspective. Ladies and gentlemen, I would also recognize the presence of Mr. Rinki, who is the secretary of Baroda branch. The chairman Baroda branch could not because of certain health issues. So I'm truly happy that Baroda branch, of whom Mr. Vishal Doshi was the chairman also and is very important ingredient of Baroda branch. So they have very kindly consented to host this very big conference. Before I end, I would like to give you some initiatives of the Internal Audit Standard Board. The first initiative, we hold a lot of internal audit roundtables where we call the industry experts and tell them what CA firms do and how they could add value to their endeavors, their perspectives. Second, we are very keen in developing technical guides. And for that, I want to invite anyone amongst you who's keen to write some technical guides or technical material for the institute. We can always do it. I want to tell you that we have close to 60 technical such guides, ranging from derivatives, ranging from mutual funds, ranging from tea industry, retail industry, IT industry. It's a very exhaustive list of documents which you need and a very good studying on that. The third area is that your institute, you're aware that the Institute of Chartered Accountants of India is a pioneer in doing number of things. On 30th March 2020, your institute was the first among 600 constituent members of IFAC, International Federation of Accountants, to come out with guidance on remote auditing. Yes, your institute is the first in the world to come out with the guidance on remote auditing. There are so many things which are the first, but to keep the things short, I want to tell you that your institute is setting up standards on internal audit. And we are trying hard with the Ministry of Corporate Affairs. We'll be very shortly giving us them the entire list, and we shall ensure that those standards are made mandatory so that all people across the system who do internal audit have clear-cut guidance, how they have to move ahead and how they have to work on it. The fourth, we do a lot of concurrent audit courses, training courses on concurrent audit. We do it for so many banks also, and membership also is doing. We have trained more than 25,000 members. They have certificates of newly conducting the concurrent audit courses. And at the last, I want to say, I won't stand between you and the learned speakers who are there. I would just want to tell you one very important thing. The more we learn, the more we progress. This institute is a testimony of our hard work put together so that we can translate into guidance for not only our clients, but for the nation at large. I want to tell you that a chartered accountant is a financial soldier who puts his best to ensure that the flag of the institute keeps flying at unprecedented heights. I want to thank C.A. Vishal Doshi, who was in Mumbai, but in spite of his busy schedule, he was very keen to join this program. People like Mr. Doshi would add value to this great institute, and I'm very happy that under his guidance, the institute will scale new heights. I'm thankful to Mr. Milan Lime, Mr. Samit Sraf, Mr. Rinki, the Secretary of Baroda branch, Himanshi, my council my board employees, the Secretary CA, Aarti Bansal, Mr. Arun, and all who have very candidly worked to ensure that a better conference is coined. Now it is all in your hands. I wish this conference a great future ahead, a great success. Thank you. Thank you so much.
Participants, let's proceed towards today's first session, that is planning an internal audit, which will be presented by CA Samit Saraf. CA Samit Saraf is a fellow member of ICI and a holder of the Advanced Diploma in Management and Accounting from CIM in London. He has 8 years of post-qualification experience in the field of internal audits and risk advisory. He is practicing chartered accountant, handling internal audit and risk insurance for corporations pan India, which includes listed company and government corporations as well as. Is a contributor to the Illustrations BCA's references annual publication to the subject of accounting for the past 4 years. He's a speaker at prestigious forums such as ICI on the subject of internal audit. CA Samit Saraf, over to you.
Thank you.
I would just like to say one thing, Mr. Saraf. I have an unconditional apology to Mr. Rikin Patel. I wrongly spelled his name twice as Mr. Rinky. So his name is Rikin Patel, CA Rikin Patel.
Sir, it's okay, sir, it's okay.
No, please. I never forget how in fact, I did not have an iPad, so therefore I could not read the name properly. I just now read it. We all are doing so much for the institute, and my salutations to you all. Thank you. Thank you. Mr. Saraf, the dice is all yours now.
Thank you, sir. I hope my screen is visible.
Very much, Mr. Saraf. Very much.
Yeah. So very good evening to my fellow panelists, members attending the session, ladies and gentlemen. Thank you to the IASB, ICAI for this opportunity today to be presenting at today's platform, and that too with such a topic which is critical for any internal audit engagement for us chartered accountants. Thank you to the team at the Vadodara branch of WIRC ICAI for hosting me as a panelist today. So as an opening batsman on this esteemed panel of speakers, I hope to add some value over the next 45 minutes to 1 hour from my end. My topic today is planning an internal audit. As you know, internal audit in today's world has moved from being a traditional compliance activity to a risk-based approach. Typically, the large corporates would have their risk registers, the internal audit charters, reporting to audit committee levels, in addition to their established processes and systems. But when it comes to the emerging corporate clientele that we may have, the internal auditor may have to rejig his or her audit approach and methodology. There may be a need to tweak certain items in the scope to meet the tailor-made demands of the client in order to stay relevant in the engagement. Risk assessment today has also become a very critical aspect while planning any IA engagement, especially in today's ever-changing times, which we have seen over the last 2 years. In situations which are beyond the promoter's control, the company might fail to mitigate risk and stands to lose on various grounds. Hence, planning at every stage is very important. Us internal auditors play a vital role in ensuring that the company or the client rides the tide by envisaging the future risks and communicates better by virtue of being the to-go person to the promoters. All of the above can only be achieved if the various stages of the engagement are planned efficiently and properly. With this, let's begin today's session. In the index, we'll be throwing some light on the critical features and focus areas of the emerging corporates. We'll be throwing some light on 2 standards which are specific to planning. We'll also be speaking of the internal audit charter or the engagement letter. What are the engagement expectations from internal audit function from various levels in the company? Next, we move to the process-based approach, which is the next stage to planning. The core subject of today's session, what are the various steps in planning, we'll be taking up next. And lastly, we'll be throwing some light on the challenges that we face in this process and what is the scope for value addition from our side. When you look at emerging corporates as a clientele division, what are the key features that we see? See, most of them are promoter driven. That is, the power is concentrated in a group of small individuals. Sometimes they're family run as well. Each process in the company, be it sales, finance, various functions like HR, production may be led by a member on the board, usually limited segments. Hence, there are manageable business activities in such companies. That being said, there are also limited internal controls because most of them are understood with legacy practice. And there is a possibility of the overriding by management members or other officials in the company. Such companies are also open to outsourcing certain various functions, one being internal audit. Now, when you plan, what are the critical focus areas when you take up such engagements? When you look at human resources, retention typically can be an issue in such companies. What is the skill set that is being hired? Is it commensurate to the role and responsibilities? The pay scale, is it commensurate to the industry standards? Employee benefits, so to say. Sometimes it's not as structured. Coming to regulatory compliances, be it any company in today's scenario, regulatory compliances, all boards require 100% compliance. So how do we as internal auditors focus and give the best value addition so that our clients remain compliant with taxes, the increased filings that various authorities have brought in, newer regulations that are applying across departments and authorities. When you look at the working flow or the financial matters, we can always focus on the cash flow or the working capital management, how it is done, how are the debtors managed. So this is again scope for us to give in our value additions. What is the technology maturity in the company? Does it have an IT infrastructure? More so in the work from home scenario, how was work handled? Was it done offsite? Did they face a problem? Are they using original softwares, which can again be a reputation risk? What tools are being used? Again, Zoom being one of the tools. What are other work management tools that are being used? When it comes to strategy, is there a strategy plan for demographics, peers? Is the company looking at such items? We can give that kind of advice as part of our advisory mandate. And lastly, are the clients benchmarking against industry standards? Are they reviewing industry reports, sectoral ups and downs? We can give these inputs as and when we plan or when we do an audit engagement. This is more of value addition to the client from our side. Two specific standards that speak of internal audit, first being the SI 220, conducting overall internal audit planning, and 310 being planning the internal audit assignment. There are two levels, so to say, in any company. One is about planning the internal audit annual plan, which is done typically at the start of the financial year, presented to the board or audit committee as the case may be for approval, and then it's mapped on quarter-to-quarter basis or a month-to-month basis as the requirement is from the company. In the second case, there are also in-house departments that function in mostly larger companies. So here specific departmental audits are given out or outsourced to various firms. So here specific department audit plans, which covering part of the entity, for example, let's take HR if it's outsourced, or certain other support functions which are outsourced, by CA firms. They are then presented to the chief audit executive, who is the in-house internal audit head. So there is a two-level approach here. Again, it differs company to company, but we have to take that into consideration as and when we plan. Now, what is the essential documentation that is to be ensured when we plan? Firstly, whenever you start, information gathered about the business and the company's operations, you need to do your research of the data that's available in public domain, the annual report, various industry reports of the sector, of the company, as the case may be. What are the systems, processes? Is ERP a part of the audit? Then yes, you'll have to bring in system level controls as well. You'll have to plan your audit differently. If you're using not an advanced ERP or at a very base stage, in the nascent stage of the company's life, you'll have to plan accordingly. Are there any past issues which are recurring? Again, there is scope for root cause analysis for you, but if you're aware of these issues at the start, it's always better, so you can plan better and execute your audit assignment in a similar way. Is there any recent impact to the sector? Now, for example, we have seen many sectors which have been hit by the pandemic over the last 2 years. For example, tourism, or there may be other sectors as well, which saw a certain hit. So have business activities over the last 2 years changed, or have they gone very differently than what it was pre-2020? That is also something you need to bring into consideration as and when you plan, so you stay more relevant. Next, we move to planning the audit universe. Typically, we'll look at this in detail later, but I'll just throw some light. An audit universe is made up of core and support functions. Core functions, let's take a manufacturing company, would be production, procurement, order to cash, and when you see support functions, you would see HR, IT, finance. Now, this is an example of a manufacturing entity, but the case may differ. Next, summary of meetings and communication with key stakeholders with a summary of their inputs. It's very important to be discussing and having walkthroughs with various levels in the company. You start with the management, the HODs, you then move to the process owners. So you get an understanding of end-to-end process whenever you take up any process in the audit run. So it's very important to have this understanding, because that is what will help you map with the SOPs or the manuals when you conduct the field work. Next is risk assessment documentation. In some companies, the risk matrix would be there in place, the IFC would be there in place, as the case may be, or there could be an opportunity for internal auditors to prepare the IFC or the RACM, as they call it. Next, what is the available resources that you are planning as part of your team? It's very important for their skills to be matched with the audit requirements. So for example, if you're taking an HR audit, someone in your team having knowledge of labor laws, various acts that apply to the company, it's absolutely important, so that you can give that kind of a relevant output as part of your audit. Sometimes in some clients, you may also want to take an experienced member of industry from that particular industry where you're auditing. Again, you can bring in operational inputs, some technical inputs as well, to make an all-round advice to your client. Lastly, an overall internal audit plan, which is approved by the board or the audit committee, has to be documented and has to be mapped. You can give these updates, as and when you progress quarter to quarter or month to month. Next, we move to the internal audit charter. Typically, it is a formal document which is approved by the governing body. Let's take, for example, board of directors, and it's agreed by the management. Usually, this particular document exists when the internal audit function is managed in-house. What are the 4 aspects that the charter should contain? The internal audit department's purpose within the organization. What is the internal auditor's authority within the organization? What are the internal audit's responsibilities to the organization? And lastly, what is the position within the organization? It's very important to define the same, so that there is clarity at the top levels, also at the process owner level, so there is less obstacles in this case. The charter provides a blueprint to the organization as to how internal audit plans to operate, how it plans to take up every activity on a monthly or a quarterly or a half-yearly basis. And it can plan on a year, 2 years, or a 3-year basis as well, given the risks that are associated to that particular activity. In the charter, we can also establish reporting lines for the chief audit executive of the company. Again, the CAE will be reporting functionally to the audit chairman and administratively to the management. This is typically, from my experience, I have seen this kind of a structure or a hierarchy. The charter also specifies the responsibilities of the internal auditor, be it reporting, conflict of interest, risk assessment, access to which kind of data and which premises. It's very important to have a framework around this. The charter would obviously lay down the audit plan for the year, which is submitted to the audit committee for approval, how it is implemented, and what is the structure of reporting material deviations to the highest level in the company. When we come to the flip side, that is the audit function is outsourced, the internal audit charter is typically replaced by what we call an engagement letter. I'm sure many of us doing internal audit assignments would be taking an engagement letter. If not, it is highly advised that you do it, because it lays down the framework and your roles and responsibilities very clearly, and you'll face lesser obstacles going forward. Again, from experience, I'd like to throw some light on what expectations are there from the internal auditor's side that the company would have. Audit committees typically would require crisp reporting and assurance on the effectiveness of controls. So test of effectiveness should be done as part of our audit. Executive summaries of high audit risks that we have observed in the particular quarter or the month are presented to the audit committee, and statutory compliances being 100% compliance requirements that I've seen audit committees have from us internal auditors. Now, when you come to the C-suite level, that is the CEO, the CFO, the CMO, etc., they would look at the value addition that you bring with each successive audit that you do. Again, cost control measures are harped upon, cost optimization measures are harped upon, because they have a direct impact on the bottom line, which is of great concern to this level. Observations that you're bringing out, if they are very mundane or very ordinary, there would be a stage probably that these would be mapped to the audit fees that they're paying to you. So it's absolutely important to be bringing value add, which each and every audit that you do, tell them something new And that only comes from understanding and your depth of how you have involved yourself into the audit. So that point is very important. Again, comes from experience. Last level, this is where our audit teams typically engage and work and spend most of our time, are the process owners. It's very important to understand the working constraints, if any, at the ground level, because that might take a direct impact on our fieldwork time. They would request you typically to avoid reporting issues that are found during the audit, again due to a fear that they will face brickbats as an example. So it's very important to understand expectations from these various levels. I see it as a very important aspect in planning. Before we move to the core subject of today, I would like to take you through a process-based internal audit approach that I personally deploy, and I would take you through it for your understanding as well. There are 4 pillars in this process: planning, fieldwork, reporting, and follow-up. When you look at planning, typically the audit objectives, methodology are documented at this stage. An audit notification letter is being sent to the audited department. At our end, when we are planning, we are gathering background information, as I've already mentioned, from industry reports, public domain information, or annual reports, etc. Try to identify the risks that would apply, or try to prepare the risk statements for the particular assignment you are about to take up. With this in mind, you can create the audit program for the particular department that you're taking up. Next stage is to call an entrance meeting where the planned audit is discussed. The scope of audit is discussed. At this stage, it's a very good opportunity to engage with the auditee and to gain the inputs that they may have. If you are required to tweak certain scope of items which are more relevant, suggestions can be taken at this particular stage. That being said, next you can take the charge to explain the timing that you will require in the fieldwork and the resources that are going to be engaged from your side as internal auditors. After this meeting, the fieldwork begins. You are conducting walkthroughs or interviews with the process owners, the C-suite level. You're reviewing documentation, maybe on sample basis. Again, the sample that you choose is your judgment as an internal auditor. What processes are you taking up? Who is handling those processes? Very important to see that there are documented SOPs at this stage, because that can be a sort of a backdrop for how you're auditing and checking the systems that are practically deployed. Next, you may move to testing transactions in the ERP or various process audits. There may be a different way of approaching them. Documentation that the company maintains, be it in scanned form, which you would have seen in the work from home stage, or if it's at the office of the factories or the plants, as the case may. So this constitutes typically of your fieldwork. Once the fieldwork is complete, an exit meeting is called where the internal auditors and the audited department chiefs and the process owners would be present. The audit observations are discussed at this stage. Any queries that you may have or vice versa are discussed, and corrective action plans are discussed with the target date. So very important for us internal auditors to give practical solutions that are workable for the auditee at the same time, because otherwise the target date may not be met, and then it's not a win-win for both sides. Moving to reporting, the draft report is prepared and then is shared for management comments. You're obtaining the corrective action plans and target dates as a reply from the management. And after this stage, you distribute the final report to the report distribution list that the company may have, which can include C-suite level or higher management. Once this audit run is complete, before you begin the next one, which may be a monthly or a quarterly succeeding audit, a follow-up of the corrective action plans as part of action taken report, or ATR, which is popularly known, may be necessary. If there is a need to retest certain items which remain open based on your judgment, you may choose to audit certain functions, but ensure that the audit tracker is adequately presented to C-suite and the higher management at all points. Now let's deep dive into the core topic for today, which is planning. What are the steps in planning an internal audit? We've been talking of a risk-based audit approach. The first step is that of understanding the organization. This stage might include gathering business information, sectoral updates, background research, material impact due to external factors which are outside the powers of the company. We'll come to that in the subsequent slides as well. Identification of the audit universe, core and support functions. Risk assessment, timely identification of risks applicable to the business, which is like a risk control matrix. Next is audit planning. What are the resources to be allocated? What are the skill sets required? What is the time frame you're going to take? Basis which the audit plan is created to be more relevant here. This audit plan is discussed with the management or the auditee HODs, solicit the feedback. Again, like previously mentioned in the previous slide, you may require to amend if necessary. The whole audit plan is then placed for audit approval. That stage is next. And lastly, the implementation of this plan. So it's a very specific 7-point audit approach that can be taken while planning. When it comes to assessing risk, at least annually, the risk should be assessed as part of the risk assessment matrix. And if there are any changes that have happened, you may amend this RCM that is deployed there. Step 1, when you understand the organization, like we previously mentioned also, what is the analysis of what type of documentation is something that we as internal auditors can look at. Firstly, when you look internally in the company, take the hierarchies, the organization charts, what is the authorization matrix for payment approvals, etc. Is it documented? Or if it's a younger company or a very nascent stage company, can we support in this documentation? These are absolutely important documents to understand the structure. Does the company have a vision and a mission statement which is relevant to what you are seeing as an auditor, or is it only documented? So please go through the same. Next, ask for the SOPs, the manuals, the process flows, flowcharts that the company might be maintaining. Every company has a various terminology that they use for this particular item. Please review past reports if available. If you're taking up an internal audit assignment midway from the older auditors, you may have access, or you may request for access of past reports to understand the maturity of the internal audit function, the maturity of those processes which have been audited. Are there recurring issues or not? Again, very important for you while you plan your year. Annual reports which are available in public domain, filings that are made with government authorities, the team can go through the same as well. What are each of the business processes that make up the company? When you prepare the plan or you draft the scope, understanding these levels are very important. And lastly, in that case, news reports, RSS feeds, press releases. More the data in today's internet age, you cannot say that you do not have access to certain data. Almost everything is available on the internet. All that is required is the grit to go and find out and research. That's all. And that is what creates the base for value addition. Interaction with stakeholders. Internal audit as a function is not done in a cubicle or in a cabin. It's absolute need to talk to your stakeholders, to be a one-on-one discussions on a recurring basis with the process owners, the HODs, to understand where the organization is going, which processes are undergoing what kind of change, because that is how you may have to amend your fieldwork. These levels may include key members of management, promoters, board, audit committee. Try to set up recurring meetings with these levels. If it is not forthcoming, you may suggest, because that is how you are then in the face and you can stay relevant as well with your advice. Walkthroughs with process owners is something we've already discussed. It's very important to document the practices, because once you have the walkthrough, you're documenting your notes, you may compare that with the SOPs that are documented. Sometimes you may find that there are differences. And if there are material differences, then there is a need to revise or amend these SOPs. Moving to step 2, identification of the audit universe. Auditable units, if you were to say, can be a department, HR, finance, IT. It can be a process, that is P2P, procure to pay, O2C, order to cash. In a group, it can be entities also. There can be various functions within a process, or there can be certain locations that are asked to be audited. Suppose a company has 5 plants and they want 3 plants to be audited in year 1, 2 plants to be audited in year 2. Again, that becomes an auditable unit. Core processes, this case that I've given here is for a manufacturing company. So order to cash, procure to pay, inventory, logistics. Production is something that can be added, again, company to company specific. Support processes may include finance and accounts, HR, IT systems. Now in IT systems, it's a growing area of advisory and audit. If you can, or if your firm can provide the IT audit services, there is a huge scope, and we've seen that kind of requests coming from the client side as well. Even more in the last 2 years, because certain systems have been seeing the risks, maybe from remote working or from not having certain frameworks or firewalls. They've seen those risks actually come into reality. So hardware, software, data security, what are the rules around it? Has the company taken any steps to ensure IT systems are in order? So ERP reviews can be, or cybersecurity audits, that can come here. Stat compliances, typically you can do in 1 quarter, or you can take it up in every quarter. taxes that are financial act, labor acts, and certain other acts that apply to the particular company can be taken up here. And lastly, qualitative indicators. Now, it is a very subjective item. This sometimes safety audits in companies are outsourced to specific empaneled safety auditors. You can, as an internal auditor, go through the same because there can be a critical impact to certain processes. So when you take up inventory as a process, if there is certain risks that the safety auditor has brought out in the stores area, there can be an impact to you. So it's very important if you can go through safety audit reports on a quarterly basis or a monthly basis. Are there any health hazards that have been pointed out? ESG, that is environmental social governance, a new concept of sustainability reporting that's coming up over the last 1 or 2 years, and now many audit committees are taking it up. If you as an auditor or an advisor can give any inputs to the audit committee or the board level, I'm sure it is more than welcome. So there is a separate area that is now being added as part of assurance and consulting. Moving to step 3 of risk assessment. As an internal auditor, you're required to conduct an overall risk assessment of all processes that apply to the company. Give a risk prioritization, so identify the significant risks as and when you're doing this. Chart the audit engagements based on the prioritization. So if certain processes are high risk, or you're seeing more out of 10 risks, for example, in P2P, 7 are high, 2 are medium, 1 is low, and the others are not as high in the other processes, you may want to take up P2P on priority. So this risk assessment will help you plan your audit better. If there is already a risk control matrix in place, as auditors, you may test the controls and give a report accordingly as part of your regular internal audit reports. Alternatively, there is no RCM, there is an opportunity to prepare a risk control matrix for each of the processes and present to the management. What are the risks that we're talking about risk for so much time, risk-based internal audits, risk-based audit approach? What are the risks that are, constitute this universe? Operational risks that directly impact the business, financial risks which have a financial impact, compliance risks that are attached to stat compliances, for example, IT risks, again, due to not having firewalls or ransomware risks, so cybersecurity risk can come here. Reputation risk, if there is a risk that directly hits the brand or the goodwill of the company due to certain issues, it can be covered here. And lastly, fraud risk. Frauds, forensic audits are totally different, but as internal auditors also, there is an opportunity for us when we deep dive to identify certain processes which may lead to a fraud in the future. So prevention is better than cure. If you can identify these 6 or 7 risks, I'm sure there is a lot of value addition that you pinpoint to the management levels. Coming to step 4 of audit planning, the internal auditor can consider inputs from stakeholders and finalize the plan. Like we've said in the past, the core and support processes have to be included in this plan. Please do not leave out any plan. At a draft stage, please request the auditees to come in and give their inputs as well, because the plan is for the entire year. At this stage, you can also define the frequency of audit runs. Suppose there are more than 10 processes, but you have only 4 runs to do in the year, which are quarterly. You may plan it over a year, to a 2-year or 3-year basis. Some departments can be taken up once a year. Some departments can be taken up once in 2 years. Some departments can be taken up once in 3 years, as the case may be. But here the risk assessment matrix is very important. It's very important to prioritize your risks. This will help you define the frequency. Detailed scope of each of the sub processes. We have to prepare it much in detail. Deliberate and communicate this to the HOD, get their input so there is less obstacles as and when you deploy for fieldwork, you deploy your resources for fieldwork and move to the next stages. Very important aspect is do not surprise your audit department. So when you are planning an audit, please send them the audit notification letter or email much in advance. Give them an idea that these are the days we are going to start. 15 to 20 days is, for example, we are going to take for our fieldwork. The overall process is going to take X number of days. When you give this kind of a notification in advance, they can also plan better. They can give you a single point of contact from their team who can coordinate. Lesser obstacles, more output. As auditors, the next point is very important. That's that of a root cause analysis. Now, as when we do audits, there are 3 broad levels that we classify this under: people, business processes, and IT related issues. A root cause analysis is a deep dive in a particular observation to understand what caused this particular problem. Was it related to your human resources? Was it related to some deficiency in the business process, or is it IT link where you might need repairing the ERPs or any other IT systems? A root cause analysis also will help you avoid the repeat observations in the next run when you take up the same area. So if you can give this kind of a value addition, again, you are solving a big problem which the client today may not realize, but over a period you are improving and bringing a certain maturity to this particular process. How do you plan as an auditor to approach this 100% compliance with all regulatory requirements of the company? Like I've previously said, financial acts that apply, labor acts that apply to the company, and other acts, maybe Contract Act or Factories Act, as the case may be. You need to have an understanding of the 12 to 15 or 18 acts that apply to the particular client company, prioritize and take up acts in specific runs when you take up stat compliances. Again, it's a very subjective approach. I will not advise all to take up everything at one time, or you never finish the audit. So plan this out, but keep a specific focus on stat compliances. The overall time span of the audit, that is from day one of planning to finally issuance of the report to the highest level. Very important. Now look at it from your side as an internal auditor. You have to map it realistically to the scale of remuneration from a client to client basis and the resources that are available with your team. If you have inexperienced resources in your team, you might take more time. So the learning curve has to be reached. So all this also, these are very intangible aspects when it comes to how teams work and everything, but it's important for an internal auditor to plan all these facets to have an all-rounded approach and to ensure you finish in time as you have promised. Step 5 is that of discussing the audit plan with the management. Again, without the approval of the board or audit committee, you should not progress, and ensure that this plan is documented into the minutes. As an auditor, the assurance has to be given to the highest level of the board or the audit committee that we are covering the most important processes in a certain prioritization manner. If you're covering all, you have specific processes, be it. If you're doing it in a 1, 2, 3 year approach, so be it. But be very clear with your communication. Propose estimated timelines of your fieldwork and report issuance. Again, you can be communicative at this stage. Before we move to the next slide, what should your plan consider? 1 is inputs from all stakeholders that apply. 2nd, frequency and the timing of these audits. 3rd, your resource allocation. 4th, skills management, as the engagement might, if it's complex or not so complex, it is commensurate to that. A realistic approach from your side to the engagement. And lastly, maturity of the processes that you are taking up for audit. Even ERP, their legacy practices, no documentation, certain factors like this may impact or may tell you a lot about the maturity of that particular process. Even if the company is say 50, 60 years old, sometimes there could be legacy practices which are not documented because the same person has been handling those activities 10 years, 15 years. As an internal auditor, try to bring in more system-driven approaches rather than people-specific approaches. That's a value add. Step 6 is that of a board or an audit committee approval to the plan. On approval, this plan is shared with the HODs or the C-suite level. If you recollect at the start, we had mentioned some external factors that may impact your audit plan. What are some of these examples? Changes in laws that keep happening. GST is one of the laws that we are seeing many changes that come. So what are these changes in laws? How they impact your client? Again, might impact your audit plan if it is a material change. Regulations, if the industry scenario is changing, which is out of your control, but your client has to map accordingly, it might impact your plan. If there is a change at the leadership level of your client company, a new management is coming in, maybe a different focus, a different vision, a different mission, you may have to also alter your approach. If there is an acquisition or a sale of business, you may have to add or delete an auditable unit. So again, there is a change in audit plan. Some new risks that have come in to that particular process or that apply to the company, you have to identify those. Over the last 2 years, the pandemic has shown us so many new risks which were unforeseen earlier, but they came into reality or fructified in this last 2-3 years. Please change the plan if you are seeing material impact there. Changes in political or environmental scenario, there can be a war, pandemic, several things that are outside the company's control, but may have a direct impact to the top line, the bottom line, or any other tangible or intangible factors. As auditors, please change your routes accordingly so you stay more relevant to where your company is progressing. In case this audit plan is required to be amended mid-year, given the aforesaid cases, such communication should be made to the board an approval should be sought so as to ensure that these changes are brought in immediately. The audit plan is then implemented basis these above steps. So it's very dynamic. Audit planning is not very simple. We might think at the outset that once we plan, okay, we know what we have to do in every quarter, and that's fine. But so many things that we have seen in the last 5-6 slides can bring a material impact to how we work, how we function as auditors. So it's very important to stay. You have your ears on the ground, basically. Now that we are done with the core topic, some challenges in internal audit that I have seen personally from my experience, which have impacted planning or execution. Legacy practices versus documented SOPs. Like I mentioned in the previous slide also, there are certain client companies who are very confident on the practices that keep happening in various departments, and there are no risks that they foresee. But as internal auditors, it's very important to have a 3I approach, ensure that there are documented SOPs or manuals or flowcharts. So if that same person who is doing this activity in the company for the last 10-15 years moves out for any reason, there should not be a stage that it is a headless organization or a headless department. So it's absolutely important to have a system-driven approach. From your internal audits, try to find risks that are seen by these legacy practices, so you can bring in those suggestions as well. Resistance to change. This can come at various levels: people, business processes, or IT. Sometimes when we are doing the process for a long time as a member of the company or the management, we may not want anyone from an outside domain to come and tell me how I have to run my business. So it's very important when you suggest, please have a practical suggestion and have it back to its supporting documents, because until you give proof, everything is in the air. So if you are trying to bring a change, a positive one to the organization, having a very defined approach to it is very important. You'll have lesser obstacles here. Sometimes internal audit is considered as a compliance requirement. Section 138 that we see in the Companies Act, certain clients or class of companies required to do it. But a suggestion would be, when you are brought in as an internal auditor, you keep giving constant value add or process improvement suggestions. You are not seen as a cost center. You are then seen as an advisor as well. So there is a lot of scope for us to change this notion that some parts of the world would have about internal audit as a function. If there is a lack of a top-down approach, there will be a problem there. If the management does not want, then an internal audit, it's very difficult for you to drive your suggestions through. But take it as it comes. I'm sure no management would say no to process improvement or value addition as suggestions. Pressure on audit fees. Sometimes there is a disparity in work or fees. The lesser paying clients would want a lot of work to be done. Try to have it commensurate as far as possible. If you're doing certain processes, ensure that you're adequately remunerated for the same. There is a focus on financial audit instead of process or risk-based audits. Now, gone are the days of traditional audit or vouching, for example. There are so many softwares that are available, which are automated tools with AI and ML coming in. So us internal auditors are no longer, prerequisite to start audit. We are not just here to do a ledger scrutiny or a financial audit. There are process audits, operational audits, risk-based audits, which are on the table to be taken. All we have to do is seize the opportunity. Investment constraints, you may want to suggest bringing in an ERP, for example, or upgrading the cyber systems, but there may be constraints at the company's end, which we have to accept at a certain point. But within the wherewithal that the company has, please try to ensure that you're giving suggestions which are more practical and which they can deploy at today's stage. Precaution versus cure. Always better that you give your audit report, closer to the quarter. So suppose your quarter is October to December that you're doing the internal audit. If your report goes within the 30 or the 45 days from end of the quarter, it's more relevant, and these issues can be resolved at a very quick there will be a quick turnaround. Do not wait or do not try to delay a lot of internal audit reporting at this stage. Only then will you be taking this point. Staff loyalty, especially in promoter-driven companies. You may give suggestions, but they are the eyes and ears of the management. You may face some kind of a resistance. Try to be more technical. Try to give the suggestions which may be taken up by them. This is a challenge. Again, case-to-case basis, it might differ, but keep it at the back of your mind. Weak internal controls, there may be no maker checker. For example, the department is small, there is 1 or 2 people, so there is no segregation of duties that is defined. So there can be these issues of internal controls. So you may have to do a more deep dive, take a more sample size that you when you do the audit. So only then you'll be able to tackle the issue of the weak internal control. So these are some challenges that I've seen. You may have seen some more challenges, but you may add, feel free to add from this list so that you work on the same. The last slide for today is about scope for value add by us internal auditors. My suggestion to all the participants today would be to continuously upgrade your skills. There are many courses that are available in the public domain. There are various sites. I may not want to name them, but there are various opportunities for us to upskill. Various certificate courses that the institute offers, which are DISA or certificate course of internal audit, concurrent audit. Please keep updating. You may want to set a target for yourself. That's how you will stay relevant to the changes, and also you can display this during the pitch to your clients that you are adequately trained, not just by being a CA, but you have a relevant DISA degree. If suppose you want to take up a system-driven internal audit, so very important to have this endeavor. Your research will show when you do the audit, if you are having a knowledge of the recent announcements that governments keep making on a regular basis, more so during the budget as well. I've taken some examples that were there in 2021, the Atmanirbhar package that was announced, the subsidies that are announced. Whenever you take up any audit engagement, if you know or have knowledge, or at least can direct them to the particular experts who can give this particular service, the company stands to gain, and you are then moving from the internal audit role to an advisor role. So that should also be one of our endeavors as internal auditors. Include niche areas such as subsidies, tax incentives, ESG, CSR as part of your scope. Try to bring them in your audit universe. See, these are tangible benefits which were not otherwise tapped by the client company. Sometimes the clients may not even know these kind of subsidies or offerings exist, which they can readily take. But if your research is that strong, you can bring this to the knowledge, and obviously then it's beneficial to your client as well. Map the SMEs or the emerging corporates practices with the industry best practices. With your experience in the particular industry, let's take auto. If you have dealt with multiple clients in the auto space or the auto ancillary space, you may be aware of certain issues that apply to P2P, O2C, certain operational process issues. You can bring them to the emerging corporates or the SMEs. So there is a lot of scope, and there I have seen personally also that these clients would want you to map them with the industry best practices. So there it's a top-down approach, and there is that scope for you to bring it and bring the consistency as the best possible for you in your role. Root cause analysis, again, for the sake of repetition, it will help you in avoiding repeat observations. The lesser repeat observations you see, it will show you internally as well that there is more engagement. They are taking your suggestions very seriously, and you have not seen the particular problem in the next time you've done the same department. Offer practical solutions which are workable in a defined space of time. Only then will it be more engaging. Another suggestion which has worked is shuffling the process runs quarterly. Suppose you take up O2C in April to June. Next year, you might want to do it in July to September. So try to see if it's a seasonal business, a cyclical business, try to shuffle this so you'll see how the company is performing in that particular process in a different period. Be a good communicator, improve in presentation skills. You may be the best auditor, you may be the best analyst, you may have done really good audits, but if you cannot communicate to the highest level or in the draft stage or the discussion stage, it may leave that gap, and they may not understand the real intent of why you are mentioning a particular point or pointing them in the direction of a loop or a lapse. Work not documented is work not done. In today's times, it's absolutely important, with the regulations that us internal auditors or generally CA firms with NAFRA coming in for stat audit, it's very important to document your audit approach, your working papers, your methodology, the samples. Entire audit file should be well documented so that you are secure if at all you are picked up for any peer review, etc. Look ahead, build a better tomorrow. That's a suggestion that I always give. An emerging corporate or a smaller company today is tomorrow's bigger company or a bigger corporate. So no assignment is small, no client is small. It's how you engage, it's how you advise, it's how you audit. and that is where your scope or your engagement also lies with, and your importance. Move from being just an internal auditor to being a business advisor. This shift we should endeavor doing. Only then will you be more relevant for the promoters, for the management, and will not just be seen from someone who comes on a quarterly basis to do an audit for 15 or 20 days. Before I end, like Nanda sir also had mentioned, failing to plan is planning to fail. It's a very famous quote, and for us auditors, it's absolutely important. So do not forget this particular thing. With this, I end my presentation today. Thank you so much for a patient hearing, and I'm sure I have been of some use to you today. I would love feedback. Thank you so much.
Thank you so much, Samitji. Samitji, I think you have perfectly explained how to do proper planning, and you gave us clear understanding on what are the expectations from the internal audit. Thank you so much.
Thank you.
So, as Nanda sir said, the more we learn, the more we progress. So let's continue with the journey of learning more and more. Moving to our next session, session 2, evolution of internal audit, which will be covered by CA Milinji. Welcome, CA Milinji. CA Milinji is a chartered accountant with 25 years of experience in assurance and operational audit. He is specialized in carrying due diligence reviews required for strategic investments and for mergers and acquisitions. He also specialized in designing SOPs for various business environments. He had been co-opted as a member of Internal Audit Standard Board of ICAI for the year 2021. Milinji handles the internal management audit assignments for the companies in the business houses, MNCs, and the software companies and the public sector enterprises. Milinji has presented so many papers on the internal and management audit at various seminars and conferences organized by professional bodies. Milinji has contributed for many articles on internal and management audits for the magazines and newsletters published by various professional forums. Over to you, Milinji.
Thanks for a nice introduction, Himanshi. So let us start with the presentation. First of all, I would like to thank Nandaji, very good friend of mine, and other officials for inviting me for this seminar. My fellow speakers, Samit and Manojji, and of course the office bearers of Baroda branch. The topic itself is very interesting, that technology as the enabler of internal audit. So from that perspective, I thought that let me share my journey as an internal auditor, starting from IA 1.0 and now researching and preparing ourselves for IA 4.0. So on one side, when technology as the enabler of internal audit is aspect, and other way, I would look at it as internal audit as enabler to technology. So when we are changing or moving ahead at a very fast speed from in last say 20-25 years, 3 decades precisely, it is necessary for us to understand that how technology is even involved and affecting, and how best we can be the internal auditors working in a very techno-savvy environment. So that way speaking, auditing or internal auditing is not at all new. Whenever a third-party person is interested with some work, the owner of the activity always thought of getting checked by someone else. So right from Chanakya days in Kautilya Arthashastra, he has mentioned about auditing per se. But the Industrial Revolution in 1854, particularly in the Europe, and then I would say that after independence in India, when the industrialization was on a very larger scale, there was a definitely more and more importance was coming to internal audits. But the speed was gathered and the internal audit function changed dramatically after 1991. All of us, we know the economic reforms introduced by the then finance minister and the prime minister. We always call it India was open to globalization, and the license Raj was abolished, and we were more proactive towards the world. From there, internal audit function in India has seen a lot of evolution. Just to track the evolution path, Audit 1.0 was manual audit tools, pencils, green pens, calculators, etc. My who can say, I mean, fellow members who are around my age, they must have done manual audits, and they must be definitely remembering the pencils and green pens, and typically this internal audit 1.0 we used to call it green revolution. Why, I will explain you in the next slide. But my contemporaries will definitely remain that was the situation. Audit 2.0 picked up after this globalization. So particularly IT audit tools came in picture, other CATs, computer-aided audit tools, softwares came in picture. Excel was used on a very large scale. Even today, we use it on a very large scale. IA 3.0, the approach was changed, and the data was given more and more importance for audit. And rather than audit, it was starting getting towards the analytics. So analytical apps and languages like Python, etc., they came in picture so as to make that data more useful and coming out with different kind of analytical results out of the available data. And now when we are talking of IR 4.0, Industrial Revolution 4.0, or Industry 4.0, naturally, we have to align ourselves as Audit 4.0. That is, now we have to go for semi and progressive automation of audit tools, RPA, sensors, IoTs, IoT Internet of Things, RFIDs, and GPS. So, well, it is changing the entire paraphernalia of the auditing. So quickly understanding internal audit 1.0, my contemporaries, I would like to catch up with them that it was primarily transaction audit just to support the statutory audit function rather than any productive results. So the management or the CFO used to ask statutory auditors that how much general sample size would you be taking for audit? If they say 10%, then remaining 90% was left for internal auditors to check. There was no concern for overall operations or any functional interrelationships. It was purely transaction audit. So when now, as CA Samitji explained that it is now a process audit, end-to-end, so P2P, like procurement to payment, we remember doing only payment audit. Means what? Whether there is amount is correct, it has been written, accounted for correctly, account heads are correct, whether the revenue stamps are there, and proper authorization is there or not. Well, I don't see there was any big value addition coming from either sides. Like even the practicing chartered accountants, they were also not much eager to go for anything. Neither the management was interested in anything coming out of that. That's the reason the approach towards I 1.0 was very much reactive. That is, okay, somehow let us do it. The detective controls were used that whatever was happening was purely kind of post-mortem and having no impact or analysis being done that whether it is impacting the entire organization as such or not, or what could be the long-term effects. Nothing was there. More of a functional approach that yes, we are checking the transactions, and so far there is someone who is checking the transaction, they should be generally in order. Compliance focused, some big companies, they were required to have internal audit, so they were appointing internal auditors. And it was purely standalone approach that internal auditors were no way concerned with the growth of the company, with other expansion plans, or with any other outside factors affecting the company, any government policies, changes in government policies, whether they are affecting, no, nothing. Purely transaction audit, whatever is the paper is in front of me, I will check it, whether it is correct or not. If it is not correct, I will list it down, that what is the mistake. So there used to be the buckets of mistakes, and we used to write the voucher numbers in every bucket. Revenue stamp not available, 1, 2, 3, 4, 10,000. Another authorization not correct, another 2,000. That way internal audit used to happen. And then after 1991, we shifted to internal audit 2.0. That was the risk-based internal auditing, which is happening even today. Now, believe me, even if we are talking of IA 3.0 and IA 4.0, IA 2.0 is going to remain. The way IA 1.0 vanished, okay, there are so many reasons, not because it was kind of reactive or functional or standalone, but because of technology also. IA 1.0 manual auditing was of no use. So internal audit 2.0 has come, and it is going to remain. That means the basic fundamentals of internal auditing 2.0, they are going to remain in any case. Only thing, the methodologies we adopt and the approach we take in 3.0 and 4.0 is going to matter. So internal audit 2.0 was definitely risk-based internal auditing. In its initial era, focused more on substantive testing of the transaction flow, focused on accuracy. Now, transaction flow means procurement to payment. When we call it, it is right from purchase requisition to purchase order to receipt of material and the bill payment finally. So that is the entire process which is being covered. So then the necessity of cost optimization, efficiency of resource utilization, timely and reliable information, etc. Things started coming in picture because typically more and more companies getting exposed to the international world, international companies started implementing ERP systems. So ERP systems, there are so many entries which are flowing from various sources. Now, no more accountants doing only accounting entries. It can flow from anywhere. Okay, so if company has 5 locations, the entries will flow from 5 locations. If there are any selling hubs, the sales entries will flow from the sales hubs. And that way, maybe there was being a big company, say they have a big establishment for repairs and maintenance. So maintenance related entries might flow from that particular location. That had changed the entire paraphernalia of internal auditing, and we had to go for the risk and process-based audit so as to understand the ERP system, the complexity of the transactions, and the procedural diversities. The revised methodologies of defining risk and mitigation control procedures around various processes was thus required to aid objective achievement. This laid down the principle of GRC, that is governance, risk, and compliance. And that was a big shift from IA1 to IA2. So COSO framework on the margin of Enron and other financial frauds frolicked the fundamental ground requisite for this new era of auditing. So Enron issue, you might be remembering, or you might have studied in your curriculum, which has disrupted so many organizations, so many methodologies, so many processes across the globe. That is where even the internal audit 2.0 gathered its momentum. Now, what exactly changed? So we studied, 2 frames back, we talked about the left-hand side, which was approach in 1.0. Now the right-hand side, the blue one, that was the IA 2.0, or that is rather. So now we are very proactive. We involve as auditors in operations of the our client company. We need to understand what all the client company is doing, what all are the things around the company, who are the customers, who are the suppliers, what is the raw material, and whatnot. Excuse me. Instead of focusing on detective controls, the auditors have started giving good suggestions, as Samitji explained, so as to have preventive controls. Overall business process-based approach was taken, and it's not only P2P, it was even the interlinked approach. So I am directly touching to the last one, that is participative approach. And it was a very complex approach which auditors are required to take. So let me take one example. Let us say if you are analyzing non-moving inventory. Now, management is aware of whatever is non-moving inventory. So if you are just reporting that, say, 20 lakhs rupees non-moving inventory is lying and management needs to take steps to liquidate that. That is not the case. So my senior friend Nandaji always talks about various couplets in his speech. That also reminds me of small couplet. Perhaps I know only few, but one that I remember when it comes to IA 2.0 is कि सवाल ये नहीं कि शीशा कैसे टूटा, सवाल ये है कि पत्थर कहाँ से आए थे. So when you are checking the non-moving inventory, one needs to take an approach that why this has become non-moving. Then what happens, maybe some of you, one of you goes to a company which is into a product which is more or less customer specific product. They don't have any shelf product. They are into, let us say, some capital goods things. When it comes to non-moving, our friend found that there are certain stainless steel nut bolts which are into non-moving. Then he first inquired that why these were purchased. So someone said that normally we use normal MS nut bolts, but this particular client wanted stainless steel nut bolts, so we used it. And but then why these? It was customer specific. Then why these are lying? The answer he got that it is to be purchased in a box of 50, whereas we need only 40 out of that. Very good. Then he jumped to the procurement, or rather the sales team or the project team, to check how much cost they have considered in their budget while giving the quotation to the customer. He found that they have considered the value of only 40 items where the company is required to buy 50. He went to the procurement team. They said that we were asked to buy, so we bought. We never cared how much quantity is required. So finally, the report came out hitting 3 different departments. One is stores, another is projects, and third is the procurement, that whenever a customer specific requirement is arising, all these 3 departments should talk to each other and identify how much is required, how much you need to buy, and whether there are any excesses, and the cost is completely captured and loaded on the budget or the calculations. And then here our friend gave a suggestion that, okay, so far these 10 are in excess. Either you give it to the customer as a spare parts, maybe as a goodwill gesture, or you may sell it in scrap and liquidate some cash out of it. That is the participative business process based or the risk based approach which IA 2.0 has inculcated. I think we are taking the queries or questions at the end of the session, so I am just moving forward. Please note down if you have any questions. I'll be happy to answer. So now we are coming to IA 3.0. Now everybody must have heard that data is new oil. Okay, and the person who is supposed to be a very smart in our country, even he has kept the name of his company as Geo. Now just write Geo on a paper and see that paper in the mirror, you will see oil. Okay, so why that particular network company is there? They are interested in gathering the data. So data is oil, but oil is to be useful. It needs to be refined and then distributed. So mere data gathering is not. Analysis of the data is more important. So that is where now we, the auditors, need to adopt IA 3.0 along with 2.0. All the time, please keep in mind that IA 2.0 is going to exist. It is not going to vanish. IA 3.0 and 4.0 are the technology enablers in order to strengthen your 2.0 capabilities. So reliable and timely data analytics not only optimize resources, but also helps organization in effective decision making. A structured data collection and analysis enhances value chain system of the organization. Of course, I'll just read out first and explain by examples how we can do that. Increased use of technology and availability of data in public domain as well as in the company domain helps proficient use of data with help of proficient data analytics tool, and overall approach is towards helping the decisions. All these days in internal audit 2.0 and all, we were not directly involved or participating or supporting the decision making. Now, IA 3.0, we are per se participating in the help, in the decision making, because whatever technology, it is not going to the human brain. Wherever and whenever there is involvement of human brain, there will be requirement of audit and there will be requirement of some participation or help in the decision making. Okay, so let me take one example that how data can be analyzed and you can help the management in taking good decisions. There was a company having their operations in 3 locations, manufacturing identical products. As per their policy, the procurement was decentralized for various reasons, convenience and all. The raw material was all similar or rather identical. Other things were identical. And our friend auditor, he was there for maybe some 8-10 years. They were auditing the company. They had a lot of data available with them. The company also had a lot of data naturally with them. What they analyzed that the main raw material, which was steel, as per the company policy, the share of business was divided amongst the 3 suppliers. So there were total 9 suppliers. And what the auditor realized that the deviation or oscillation in the rates by these 9 people is too much. So on one side, one unit, one location was buying, let us say, for 110. The other location was buying as high as 160. So that was lowest was 110, highest was 160 between these 9. It was analyzed, it was discussed with the management, and what was decided that you identify 4 suppliers, fix the rates with them, then leave it for the decentralized procurement at these decided rates. So the procurement planning or how much to buy, let it remain with the locations, but this rate fixation and identification of the suppliers need to happen at the HO or the central place. So that was a big help by our auditor friend or fellow member of the institute, helping in the decision making to the management. And that is IA 3.0. Let us see a very nice picture. Now there is no text, but let me explain how important is the data analytics. This is the aircraft, very old aircraft of World War II era. This is a fighter plane in the World War II. The fighter planes which came back were analyzed, and these dots are the place, are the area, or those are the areas where the bullets were hit by the enemy planes or whatever, ground army, whatever. So these are the areas where the bullets were hit. That was the data which was gathered. And the team started working that how we can make these things better, these areas better. But there was someone like our fellow member who was smart enough. He said that the areas which there are no, on which there are no dots, perhaps we need to analyze them, because it is not that the bullets just decided to hit only on these four areas which we are seeing. They must have hit on other areas also. But believe me, those aircrafts have not come back. So on one side, the data available is also to be analyzed. It is must, everybody is doing. But it is very much important to analyze the data which is not available, or whatever data is in front of you, what it is telling. It is telling that something is there, but at the same time, it is telling you that something is not there. This data shows that what all are the areas where the bullets are hit, but the aircrafts have come back. And the areas which are blank, perhaps those are the areas where the bullets must have hit, but the aircrafts couldn't make it. And that was a very big help by our fellow member in taking the decision that instead of focusing on the dotted areas, focus on the areas which are not dotted, where the bullets are not hit. And that is the importance of data analytics, or what we call as IA 3.0. Moving forward to 4.0, which is now in discussions everywhere. In order to understand the importance of internal audit 4.0, I recommend all the participants that please read the concept paper published by the DAAB, Digital Accounting and Assurance Board of our institute. They have studied and analyzed IA 4.0 along with Industry 4.0 in a fantastic manner, And one must, whosoever is doing hardcore internal audit, I recommend that he or she must read this concept paper. It is available on our institute website. So download that. It's pretty big, around 80 plus pages are there, but it is worth reading, sparing that much time. So internal audit 4.0, as I said earlier, it needs to get aligned with industry 4.0, because finally we are the enablers. So the way industry moves, we need to align ourselves in our auditing techniques. So what is industry 4.0? It has 6 main technological principles. One, interoperability, that is inter-task or inter-operation relationship. Virtualization, that is simulated or computer-generated environment. Decentralization, it's dispersed, regional. One can transact even sitting at home. Real-time capability, it's very instant and agile. Now this agile is the word which is now going to come again and again in our discussion. I will explain you in the subsequent slides. Service orientation, of course, service focused, that you have to, even if you are selling the goods, it is believed that you are serving your customer, because finally that whatever he is buying, the product he is buying from you, is going to help him in some or the other way. So don't look at as you are selling a product, okay, that product is just mean or medium to serve your customer. So it is going to be more or more service focused rather in due course of time. And modularity, that is flexibility. So Industry 4.0 primarily is working on these 6 main technological principles. So IA 4.0 also relies on these 6 principles to increase data availability, enable continuous data monitoring and validation, and improve the automation of the audit procedures. So capturing the real-time data, analyzing them real time and making necessary suggestions without even waiting for completion of audit. You can issue the flash reports and see that, because by the time you issue the audit report, already another 1 million transactions might happen in this process. So how it has impacted the IA environment? Audit 4.0, as I said, will have to align on technology promoted by the Industry 4.0 to collect financial as well as information. This is very much important. All these years, right from the inception of our ICAI, our clients and our friends and everybody has looked at us as some kind of financial person, but henceforth non-financial information will also be required. There could be, you might be required to analyze the performance of various machines. You need to analyze the performance of labor, etc. So many non-financial, see, finally anything and everything gets converted into financial terms, no doubt, but we are going one step back. When it was financial audit, okay, whatever has happened finally, that has reflected in financial terms. So we are restricting ourselves to that. But there will be so many things which might have happened, have impacted the financials, or few things which might not have happened and impacted the financials. That is also possible. So we have to go one step backwards and see that the data gathered has to be financial as well as non-financial. Analyze and model and visualize that data for the purpose of providing effective, efficient, and real-time assurance. So more and more the companies or industrial environment will move to Industry 4.0. We will also have to change our audit methodologies. Maybe there will be softwares or audit tools coming in to be embedded with the client ERPs, so as the data keeps flowing to our office or to our laptops, and it is analyzed in various formats which we will develop for our clients. So that is going to be the need of the hour. The current volatile business environment warrants, that is the reason. Industry 4.0 will warrant a very agile, flexible, and future-ready internal audit function that can add value to an organization. See, blockchain is coming. We are also talking about AI, etc., etc. But whenever and wherever, and it is going to be there always, the existence of human brain, the involvement of human brain is there, the internal audit function will be there. So as such, the emphasis will be more on the risk and control predictions. All these days in IA 2.0, we used to identify the risks, we are used to identify the process lapses, and we used to suggest the controls. But once again, those were kind of post-mortem, post-facto. But now it has to be the predictions of the risk. Analyze the data, check. Okay, let us say the sales, let us take a very small, simple example. A company is into some FMCG products, and you gather a data that the sale from, let us say, the Northeast is going down for one or the other reasons. Now, how to increase that sales will be the headache of the sales team, but the auditor needs to check how many or how much stock is getting transferred to that particular area. If the decreasing sales are not matched appropriately with the supplies which are going there, perhaps it will accumulate and get converted into non-moving or slow moving. There could be opportunity loss also, because maybe on the southern side there is more demand, but your material is stuck in Northeast, and you are losing on sales in South also, and in Northeast, as it is decreasing. These kind of control predictions with the help of data, real-time data analysis, and the suggestions going in an agile, that means on a very quicker manner, that will be the essence of IA 4.0 in the times to come. Of course, we will have to re-engineer our audit functions in a big way, because with the increased use of RPAs, sensors, IoTs, Internet of Things, Internet of Services, and smart factories, the business world is moving forward toward a highly automated, highly flexible, and highly interconnected environment. And that is where the real-time capabilities of the corporation, fault detection, prediction, and decision making will also become a very agile. So the auditing profession should adapt to this wave of changes and leverage the emerging technology to enlarge the scope of auditing, shorten the timing, improve accuracy, and eventually enhance the assurance level of the whole business world. It is good that the IASB has arranged this particular seminar. More and more such technology-driven seminars need to be organized for our members, because if we don't adapt ourselves with the new methodologies, with this Industry 4.0, our auditing function will not be effective, and we will perhaps lose our importance as very, you can say, a learned people in the society who are always helping the management in taking appropriate decisions. So that was all from my side. Thank you very much. If you have any queries, I have given my email ID. You can write to me. I'll be happy to answer. And I'll be waiting for you to ask questions at the end of this session. Very happy to answer. Before I conclude, let me give the source credits. Number one, the concept paper published by DAAB of ICAI, and few things I have also searched and studied from LinkedIn posts. So the source credit goes to these two things. Thank you very much. Thank you. Over to you, Himanshi.
Milinji, thank you. Thanks a lot. You have perfectly explained the journey of evolution of internal audit, covering from the era of manual audits to the automation of the audit tools. And you perfectly explained the need of re-engineering our audit functions. Thanks a lot. So moving towards our next step in the journey of learning more and more. Today's third session of smart internal auditing will be covered by CA Manoj Agarwal. Manoj ji has 22 years of experience in delivering assurance and advisory services to the management in retail and facility management, BFSI, and manufacturing industries. He has aligned internal audit department with professional standards and management expectations. He is currently a member of Internal Audit Standard Board of Institute of Internal Auditors, USA. Manoj ji had held commendable positions like Course Director for Enterprise Risk Management for ICAI in 2010 and Committee of Members in Industry, or WIRC. Manoj ji writes blog on risk and control, and his blogs were published by ISSCA and IIA. Over to you, Manoj ji.
Thanks, Himanshi. Thanks for the nice introduction. At the beginning, I would like to thank Internal Audit Standard Board, Vadodara branch of ICAI, Nandaji, for giving me this opportunity to speak at this August forum. So allow me to share my screen. Just give me a second. Okay, great. So welcome to this virtual CPE meeting on technology as enabler of internal audit. So before I start this session, this is the personal risk management disclaimer. All the content of the presentation constitute the opinion of speaker, that is me and me alone, and they do not represent the views and opinion of the speaker's employers, speaker supervisor, nor do they present the views of the organization, businesses, institution the speaker is or has been a part of. So whatever I'm saying, it's my view and my view alone. They do not represent the views of my employers, ICEI, and other association with whom I'm associated with. Some of the situation which we will discuss may not be true, and identities of any parties involved may be disguised. And images, if any used, will be subject to the copyright. So with this, the personal risk management has taken care. So friends, so at the beginning, when I was working on this topic, I realized that I'm not qualified to tell you how to do smarter internal audit to a SMP, because I was not an SMP in my life. Though I worked in consultancy, I currently working in industry, but I was never an SMP, so I was not qualified to answer that. But at the same time, I can share my experience, what I have done during my consultancy days and what I'm doing currently in the industry. So this is the definition as given by ICI, and the entire presentation we are going to discuss some of the key concepts from this definition. So the definition say internal audit is an independent management function. So it's a management function which is independent, but it is not independent from management. So though as a practitioner you are representing a dependent role, but still it's a management function. It is not as independent as a statutory auditor may be, because at the end of the day, the scope is decided by the management. Of course, they are discussing with us, the internal auditors, which involves a continuous. Now, the key word is continuous. We create our annual internal audit plan. We create our quarterly internal audit plan. But is it continuous? Of course, within the limited definition, it can be continuous. But let's think, can it be really continuous, the real time, which two of our past speakers has spoken about? How can be more real time? Which involves a continuous and critical approach of the functioning of an entity with a view to suggest improvements thereto and add strength to and strengthen the governance mechanism, including the internal control system. So these are the key words I have highlighted, which I'm going to discuss in the next 40 odd minutes during my presentation. So if any of you want to have any question, feel free to ask me. Of course, I know there are lot many attendees are there, but if any key questions is there, feel free to ask me at any point of the time. So the first and foremost thing, what does management wants? Does management want assurance? No, it is given. You have to give it. What they want is value add. And what is value add? It can be how to maximize the revenue or how to prevent the revenue leakages. How to cost reduction, cost optimization, and how to control cost leakages. So both of them can also be related to the fraud. If there's something fraud is going on, quite possible you might be losing out on revenue, and you might be paying extra cost for the same. The time savings. So if anything which leads to a time saving, some smarter way, if you can suggest them, they will appreciate that. Automation, can you do some automation? Can you suggest some automation? Can you outline the flow of automation? Compliances. So if something is there which organization is supposed to do, but they are not doing it, and which can lead to penalties and imprisonment to the management, they are highly interested. highly unlikely, but you may never know. Something might exist which can actually this kind of exposures. Upcoming compliances. So if you have eyes on the future, which says that, okay, guys, from 3 months onwards, we need to do this. And are we ready to do that? If you can create or help create SOPs, then or you can help create or match what you are doing with the ISO standards, then there is something we want. And they would also want, wherever you see an opportunity, can you provide trainings to the staff, be it account staff, sales staff, purchase staff, HR staff, all the staff, so all the functions, can you provide those kind of trainings? Now, these are just, I would say, the broad categories into which I have bifurcated the various value adds that you can provide to the management. But you can have your own more categories or types which you think you can provide value add to the management. The idea is to showcase that, hey guys, hey management, we internal auditors are adding a lot of values to you and to your organization. Now, when it comes to your audit committee, what audit committee wants? Now, audit committee, it comprises of independent directors who may be on boards of number of companies and who may not have that much of time which they would like before approving, other financial results, related party transactions, certain policies, certain loans, covenants, so many other things. So what they want is no surprise. So what does no surprise means? No surprise means assurance that whatever is being presented to them is reasonable, it is accurate, it is correct. So assurance over controls, over financial reporting. So whenever management says, hey guys, we have this kind of control, those controls are actually working. When this is the financial report, this is an outcome of following of a process with adequate control, so that nothing, no misreporting, no misstatement, which is happening. Now here, the expectation is not that you're performing the role of financial auditors, but the expectation is there are numerous controls which results into a financial results. Are those controls are working or not? In any way, as part of internal audit, if you are not you might be covering and you would be testing it out with the various internal financial controls. So once you do that, you are providing controls over the control, you're providing assurance of the controls as well as the financial reporting. Compliances. There are so many compliances where there is a penalty, and whenever a penalty is there, it leads to risk to reputation. And there are also a number of compliances for which the consequence may result into directors going behind bars. For example, the organization has not paid their PF on time and not paying the PF on time regularly for a few months. So besides the interest penalty, directors can be sent behind bars. And independent directors, they may not be knowing why our organization is not paying your PF dues. Then fraud prevention detection. So when a fraud happens, it means controls are not working. If controls are not working, then as directors, they are being put into spotlight that how come their report is not mentioning anything on the control weaknesses. So CEO and CFO is certifying that controls are working, but it is the audit committee who has been given task to ensure that they take adequate steps to ensure that internal controls in place. They're also supposed to check with the internal auditors whether the internal controls are working or not. Benchmarking. So few of the audit committee directors, they would be also interesting to know, are we doing the best? If you are doing the best, great. If you are not doing the best, what we can do to do the best. Basically, what they are interested in anything which can create problem to directors. Now, why I put this thing into context is that because once you have this thing in your context, you would be in a position to deliver a lot of value adds, a lot of assurances, and at the same time, you can be working very smart. Now, what I do, essentially, I do boot. Boot is build, own, operate, transfer. So this is what I do, and what I do is also automate. So let me explain what exactly boot means. So boot means build controls processes. If you are saying, see, I'm from industry. I'm not from consulting. So if I see that controls are not there, so my job is not to say that hey, we don't have a control there. My job is to tell what should be the control over there. If I don't see a process, I tell them, hey guys, you don't have this kind of process. These are the broad parameters, broad criteria, broad activities which a process may should have. This is what I'm recommending you guys to have it. Of course, they are free to modify it. They are free to ignore it. They are free to do their own modification as long as the risk that I'm pointing it out is getting addressed by whatever they are doing. I'm fine with that. Now, many times you will see in the organization that the departments, especially smaller company, they may not have expertise, they may not have talent, they may be overburdened, and most importantly, they are not sure whatever we are suggesting is going to work or not. Especially the family-owned companies, small organization, 2-3 directors, with the very fungible segregation of duties. So they are not sure whether it is going to work or not, and the people are also not competent enough to run that. So in that scenario, you can own that control, that process. When I say own, it also means operate. So when I say own, it also means can you create it? So you own and operate. So you create a process, you recommend a process, get an approval from the management, then you operate that particular control. You operate that process. When I say you operate that process, I'm not asking you to do data entry. I'm not asking you to approve those things, but I'm asking you to do that monitoring bit. When something is there, for example, reconciliation is not happening in a particular thing. There are two masters. Now, somebody need to do that recon. Now, they may not be having adequate expertise. You can do that recon. Now, there are other ways to do it, but you can do that recon, for sometimes to show that what you are saying is making sense. What you are saying is leading to prevention of revenue leakages, leading to prevention of cost leakages, leading to time saving. So you operate those things. Once you have demonstrated that this control is working fine for a few months, couple of months, couple of quarters, 1 quarter, 2 quarters, then it's time to transfer that control to the end user, to that department for which it pertains. Because it is not your job to actually run that thing. So once you transfer that control, what you are doing is you are empowering the operations. You are ensuring that the controls that you want is there. You have built, you have tested it, it is working fine. Now the organization, the operations is going to run it, and they will take the benefit. See, as an internal auditor, you may run that control at a given frequency, but as part of operations, as an operating control, they may run it more concurrently, more in real time, at a regular frequency. Then you monitor those controls. That is, the people who are supposed to run it, they are doing it or not. And then you monitor the monitoring of the controls. For example, you are holding the departmental heads to run those controls, and those they are not going to run themselves. Their team is going to run, but they are supposed to monitor it. Because what is your job? Your job is not to point out errors. Your job is to ensure that the errors which you have identified, pointed out, they have been appropriately taken care permanently. So how does it will be taken care permanently? Because somebody need to monitor that and take appropriate measures to ensure that wherever those errors, whatever those exceptions are appropriately taken care. And what I do is automate. For example, one of the things I do is to make default option is equal to control. Just to give an example, let's say you're doing an audit of payroll and you see that number of people has put application for leave. So what should be the default rule? If somebody is not approving within the time, should all this application get approved, or should all this application get rejected? Because unless this default option is not there, what is going to happen if you're doing the payroll? Every month, the payroll team then need to follow up with the head of the departments to get their to get the concurrence because they need please approve or reject it. But once you make that, once you discuss and make this option default, then you are increasing the turnaround time for the you are increasing the efficiency of the payroll teams to process the payroll on time. Exception reporting means anything which is not normal. Once you see sometimes it is very difficult to define what is exception, but it is easy to define what is normal. For example, what is a normal vendor? A normal vendor would be, okay, the vendor would have the PAN, vendor would have a GST, vendor would have a phone number, vendor would have say email address, vendor would be a limited company, vendors would be the PAN the PAN of the vendor would be from the place where it is situated. For example, in GST the state code 27 for Maharashtra. Now, if the GST is of 27, the address should also be of 27, which is Maharashtra, should not be of Karnataka or West Bengal or Jammu Kashmir or Tamil Nadu. The exception means anything which is not normal. So once you define normal, then anything which is not passing that normal test is an exception. And you can create your exception reports, hundreds of exception reports. PAN numbers missing, GST number missing, PAN number, GST number is not matching, PAN number more than 10 character, less than 10 character, PAN number is something stupid. For example, PAN number, the whole letter P, which is for personal, and you have the company as limited company, which is not matching. Your personal PAN number and TDS is of company, not matching. You can have any of those exception report, and this exception report, when the output is there, so what you are going to raise as an interpreter, these are the errors. But at the same time, if these errors are getting detected, rectified, then you can focus your energy on something else, on real, going deep dive and doing some work. So you can automate exception reporting, define normal. You take any area, you will be able to define exception, because this is what is going to be there in 99% of the time in your checklist for that particular given area. Now reconciliation, it is a reco between anything, stage 1 to stage 2, stage 2 to stage 3, stage 3 to stage 4. It can be anything, your pay register versus your HR master, whether all the employees are getting covered in HR, they're getting processed or not. If something is not getting processed, then those can be exception. Why it is not getting processed? Are some extra people who are there in the payroll but not in the HR master file? What are those extra people comprised of? And these are the big ticket items. For example, can you replace email with forms? In small organization, so many things which is happening over email. Can you replace this email with forms? See, it can be as simple as some of your vendor may be issuing, they would be sending some purchase orders over email. Or they will be saying, I want this thing. Can you create a form, put it there so that they can fill those things, and it will lead to there is no chance you're going to miss that form. If you get hundreds of emails every day, it can get buried, but in a form, and you can appropriately handle it. A Google-based form, a Google form or MS form is much, much better than the emails or paper-based form, because you're doing some automation and you can use the data in your later analytics. Can you replace Excel reporting with reports? The entire reporting is happening in over Excel. Can you replace it with reports? When I say reports, any report, system generated report, is better than any report prepared in Excel. Because the moment something is prepared in Excel, it can be changed, it can be modified, it can be altered. But something is coming from the system itself, it gives you much, much higher confidence, be it management, be it auditor, that this is a system generated report. And if all the controls which has been tested, if they are working properly, then you can rely on those system reports much better. And can you replace PowerPoint with dashboards? No, you may have your data aging, which would be having, let's say, 500 data, but you want to present to the management. So management wants those 500 line items, but they also want a shorter form so that they can review it. You can present in Excel, pivot table, you can present in PowerPoint, but can you replace with dashboard, which is getting refreshed, say every day or every hour or every week, whatever is the frequency. If you're able to do that, I believe you are removing lots of efforts, manual efforts from the auditing process, and which may give you much more time to do something much more creative, something much more value adding thing, instead of spending time on things on doing the follow-up. Now, you can implement various audit tools like compliance management tool. Now, if you as an internal auditor decide to audit, do compliance audit. So one of our speakers said, what will we be able to do? Will be 15, 20 acts will be taking it up. But there are hundreds of acts which is applicable in India, especially if you have a pan-India operations, then your shoplifting Judgment Act would be more than 15 acts, of respective states. And then you need to take proficient acts for more than 15 for every state. So you can understand the complexities. Now, if you implement a compliance management tool, what this tool will ensure that it will prompt, it will send reminders to the people, the right people, assign people, so that they can update whatever compliances they have done in the system, and the system itself will report the delayed compliances, non-compliances done, pending task, and it can also have alerting system. If the person is not responding, it can go to its manager and manager's manager. What you as an internal auditor can do is you can audit this tool, whether the process is getting followed or not, and whether all the acts which is applicable is there or not. Once the act is there, applicable, it is there in the system, that whatever is the requirement is also getting considered. It is going to the right person to get addressed. If no one is assigned a task, that means somebody need to be assigned. And the entire compliance management becomes so easy. Your audit management tool. This can take shape of your audit management tool. It can be risk management tool. It can be control management tool. A number of companies are required to do internal financial control testing, management testing. Now, if this thing is in Microsoft Excel, then you can just assume what kind of testing they would be doing it. They would be creating a bulky file to be given to auditors. But just create this thing and make it in a tool, put it in this tool, So it will go to the right person at right frequency, and the person would be submitting this evidences in the system itself. And every month, every day, every quarter, whichever frequency you want to monitor, you can know that whether that particular task has been done or not. Action plan tracking tool. It can be as part of your audit management tool, or it can be a standalone tool. Now, the biggest issue that as an internal auditor we face is follow up on the open issues. If you are doing it on MS Excel, so there are 10 departments, you will be sending them to this open issues to them. They will be updating. Then you will be doing a consolidation. It's a huge waste of time, and they will be doing follow up. Sir, they don't. Sir, they don't. I need to report, or I will report. You have not given. So everything you can avoid it, because you can just turn with it will be going to them. If they are not updating, it is going to their bosses. If it is not, they are doing it. It will go to, let's say, CEO, CFO, that these people have not submitted. So half your job is done. Now this data analysis tool. Now, if you have some data analysis tool, there are a number of tools available in the market. But if you have this tool, then whatever analysis you have done on a particular set of data for a client, or for me, for example, for my organization, I can convert that into a script. I can convert it into a query, and I can run it. See, if I've got a direct access to the database, I can run it every day, every week, whatever frequency I want. Not only that, once I create that, I will run it, and then I will give it to my operations team. Okay, guys, you run it. You run it. The issues will be coming up. You address those issues, and those issues should not be coming to me. You can also do the same thing. You have, say, 20 clients, quarterly audits, or half-yearly or annual audit. Once you have defined what you need to run it, you can run that thing every month, and you can give control assurance as a service to your various clients. Exception reporting. You can use data analysis tool, or you can create your own this thing. For example, SQL queries. Generally, everything is into Microsoft MS SQL, all those databases. You can create your own MS SQL queries and run that. You can use data analysis tool. You can use data visualization tool. So something is there. You can use data visualization tool to highlight certain things. You can use this for highlight outliers to the management. If nothing else, at the minimum, it can be used for monthly reporting. You can implement whistleblower too. So what this tool will do, other people can whenever they want to complain, it will come to this tool, and then you can review it and decide it. And this tool can also provide you appropriate mechanism, what you want to do, whether you want to pursue, or you are saying, okay, we have done it, but nothing is outcome. So this is again very helpful tool for the companies, because statutory auditors are required to report certain frauds, and this tool can be a great tool to demonstrate the seriousness of the organization for this. Now, this was that the earlier slide was mainly on the audit, but this is on the operations tool. And mind it, if you are able to do that, though you would be reducing your day-to-day, the usual things, but the kind of the control gets strengthened, the kind of information gets strengthened. It will give you different dimensions to your control assurance work. Now, GST reconciliation tool. Now, whether the vendor has updated, not updated, whether we have booked right, wrong, somebody need to reconcile it to ensure that whichever is not matching it, which is not uploaded, we are doing follow-up with the vendor, we're holding back their payment, recover their payment. Now, this thing requires us this has to be done on every monthly basis. Now, we have e-invoicing, okay? Now, something is getting done, getting fetched from the portal, then getting done. But we need to also ensure that whatever we have in our system is also there in the portal. And how you will ensure that? Only by reconciliation. Government keep changing law. They will say, okay, guys, whatever is there on the portal or whatever you are submitting, whichever is higher, you need to pay duty. You need to pay tax. You need to have this kind of reconciliation. Employee reimbursement too. If you do an audit of employee reimbursement or employee certain employee benefit schemes, your travel expenses, what you will find? Somebody is claiming excess, somebody is claiming short, somebody is claiming one-day excess, somebody has not signed some document. All those can be eliminated with the help of this kind of tools, because the entire workflow would be there. And at the end, so all those approval data, the data integrity, data evidences, everything would be there. And they are now the tools have the kind of capability that you can directly integrate. Whatever expenses the employee is incurring, you can directly link it. It will be directly fetched, and you can also compare what kind of evidences they are doing and what kind of data is coming from the various other sources. And you can take persons to the task for various, let's say, violation of the processes. Your HRMS tool, it can take care of attendance, leave, timesheet, PMS, sourcing, separation. It can do everything. Now, let's take as a SMP, if you have your practice management tool where you create your client, you create assignment, you assign your various teams submit their timesheet against that particular project. They confirm the completion. You know what is the time cost. You can compare that with your estimate and decide whether to retain that client or not. You can do so many other things. Vendor risk management. It can be for risk assessment, onboarding, tracking, performance appraisal, so many other things. So that that you can also use for getting fee codes, for example. You can create vendor portal. So instead of vendor submitting some bill, they can directly upload that bill into the portal. They will also update who they are, what is the bill number, what is the amount, when they have delivered, everything there, and they will upload it. And you can simply pull the data inside your system, or you can automate this process. You can create workflows with a form. For example, Worker is a system. There are a number of other systems available. So you can create everything a form, and with the workflow, and everything will move into the workflow. For example, let's assume you are a distributed, you have a pan-India operations. Let's say you have 100 offices. Let's centralize HR. So you do your people are joining at 100 locations. How do you collect their KYCs? How do you collect the changes in their designation? How do you collect their request? Maybe you can implement such kind of form, or you can enable an HRMS tool to take care of that. The idea is that you automate to the extent possible, and people and the data entry can be either minimized, or it is all those middlemen can be eliminated. So what is smart? I would say the smart is generally it means specific, measurable, realistic, time bound, but it can be a smart scoping when you do scoping. So if you as an internal as in-house internal auditor, I do smart scoping. I create my scopes very specific that I need to do this. Once I do that, I'm able to generate more number of reports, faster turnaround time, and I would be able to take care of specific needs of the management, where they want somebody to look at some specific things in certain specific processes. Measurable. Instead of saying measurable, we need to measure value added or non-value added. We need to quantify everything. If you are adding value, we need to quantify. If you are not adding value, we need to quantify. For example, one of my ex-organization, they had a philosophy that we need to give 7x time of the cost. So if the fees is 1 lakh rupees, we need to give value addition of at least 7 lakhs, if not more.
It can be across various dimensions. So A is achievable, I would put it actionable. So whatever is the outcome has to be some actionable outcome. If it is not actionable outcome, it's only an information which may not be of any use. So R, for me, R is along with realistic, it has to be repeatable, regular. Can I do some robotic process automation? Because if I'm able to do that, that much work I'm reducing it. And time bound is, I would say, timely. The moment I automate anything, the moment I create exception report, the moment I implement a tool, I can put the time as a dimension there, and based on that dimension, things need to happen. If they are not happening, automatic escalation would be happening. It automatically reminders would be going, and this is what things will make timely. If you are not able to give outcome of internal audit in a shorter time, and if the time between your field audit and report, if it is large, it may lose relevance. So the idea is to reduce the time between happening of an event and the reporting of the same. With this, I am almost at the end of my session. So if you need any clarification, that what did I discuss that you want to know more about, and what did I not cover that you would like to know? So Himanshi, I'm at the end of my session. So back to you. If there are questions, I'm happy to take them.
Thank you, Manojji, for such value addition. I think you have smartly explained what is smart, and thanks a lot. There are few questions asked by the participants. That what is the scope of technology in internal audit, including the concrete audits in bank?
So sorry, can you repeat the question? And it is addressed to whom, me or Bilinji or Samitji?
Samitji?
Samit, you can take it.
Okay, with regards to IT, right?
Yeah.
So ITGC is something that we can do. The VAPT audits are also part of the scope that can be done. Cybersecurity is something that can be covered. ERP reviews is something that can be covered. See, there are specific skill sets that are needed for these audits. And when it comes to concurrent audits, again, it's a separate skill set. Being someone from internal audit, it's very difficult for you. It's good that you're doing it, but it's a specialized field. So, like I mentioned, these 3-4 types are the audits that are on offer when it comes to BFSI. Sir, would you like to add something, Milind sir, Manojji?
No, perfectly addressed.
I will only add that just follow the users. So in and out of system, users in and out of system, and you will get ample observations for your report.
Yeah, right. So let's move to our next question. Is there any new technology in the developing stage that will help us in the internal audit?
Yes, there are many audit tools which are being developed. See, basically, when we are talking of audit in this technology environment 3.0 or 4.0, first, our industry needs to mature to industry 4.0. So right now, I don't see any reason why one should immediately rush in the market to buy some audit tools, etc. Only thing, you need to be very watchful and keep yourself updated about various developments which are taking place in the industry. And accordingly, you have to develop the tools either in-house or there will be tools made available in the market as well. Currently, some foreign companies, they have audit tools which are being used in European countries or in the US. But in Indian scenario, as of now, I won't recommend that. Number one, it won't be utilized completely, and that's why it will make them a little bit unaffordable.
Thank you so much, sir. So in past we used to follow some guidelines based on internal control questionnaires, but now these days everything is system based. So is there any scope to follow those particular guidelines isn't it?
Not really clear. Can you please repeat?
Yeah, in past we used to follow some guidelines based on internal audit questionnaire, but nowadays everything is system based. So is there any scope to follow those guidelines, or there should be other additional guidelines which is technology?
Okay, first of all, see, don't go by anything as a spoon feeding. Don't go for anything which is available somewhere as guideline or anything. Guideline is a guideline. It just helps you in walking. So those guidelines, of course, Internal Audit Standard Board is coming out with many new standards and publications and guidelines about guidance notes on these industries and how to do internal audit for a specific industry. Nandaji and his team are taking very fantastic efforts in this direction. So you need to keep yourself updated on this front rather than searching for something ready-made, ready to eat or ready to cook kind of Maggie 2 minutes noodles. No, that is not internal audit. It has to evolve. It has to develop around every client's individual environment, because whatever internal audit I might be doing in some manufacturing company, not necessarily it is being done in the organization where Manoj is working. It's totally different. So guidelines are just guidelines. It will help you, but it will don't use them as some kind of tool to do internal audit. You won't be able to do anything fruitful in that case.
I will add that whatever is there in the checklist, I will try to convert them into some sort of automated control. So I don't need to audit that area again, internally or externally. Of course, I need to do the testing every year, but I don't have to then get that particular area, that particular activity in that checklist again.
Manoj, there's another question for you. If we build, own, or operate controls, so how can we objectively do audit?
See, internal audit is an independent management function. It is not independent from management function. Okay. Now, so when I build now, let me ask one example. Okay, the organization, let's say, very simple thing. Okay, so in your organization, you want to decide that you want to give some sort of food allowance and lunch limit to your articles, to your staff. Okay, now what is the right limit? It is 100 rupees, 60 rupees, 150 rupees. Now, if you ask your article, then, and if that person happens to enjoy, let's say, pizza, you say, sir, what nonsense, we should give us 500 rupees limit. But if you ask your, article, 10 years, 20 years back, you say, sir, 50 rupees is enough. So, if that person is fixing, you will say 50. You will accept that 50, or the other person will say, sir, 500, you will accept 500. Both of them need to come to you and you will be approving it. And this is what I do. I pick up a number, whichever I'm comfortable with. If I don't have any number, I pick up a number from the air and go to the management. Okay, sir, according to me, this is what we should, this is the limit, or this is the, say, minimum we need to do that. And then they modify it. So that is what gives the objectivity of whatever I'm doing.
Thank you, sir. This one, another question. As an external auditor, what are the points to keep in mind comparing two internal audit reports to make an idea at a glance?
Didn't get the last part, Himachi. Can you please repeat that one?
Yeah, as an external auditor, what are the points to keep in mind comparing the two internal audit reports to make an idea at the first at time of AC?
I'm still unclear about the question. I'm not able to understand the question itself. Sorry.
So is the question is the as a statutory auditor, if I'm seeing two reports, how to form some preliminary idea about the state of the controls? This is the question means.
No, maybe whosoever has asked, he or she can write to us in detail. So Manojji or maybe Samitji, we can answer it. That is not an issue. You must have noted our email IDs. You can write to us and it will be our pleasure to reply you.
Milind sir, one question for you. Where do you see the future of IEA 4.0 in India when it's being used and be effective?
It's definitely going to be there. We need to start preparing from now, and by the time we reach there or start using, it will be, I would say, another 3 to 5 years. It is just knocking our doors. And as I said earlier, believe me, IA 2.0 is not going to vanish. 3.0 and 4.0 are going to come in picture as the add-ons for IA 2.0. So the basic analysis of the data, working out on the data appropriately and taking out right inferences and giving suggestions to the management, which is the essence of internal audit. If you keep that in mind, then adopting 3.0 and 4.0 technologies or the methodologies will not be very difficult. But if you are asking the time limit, I would foresee somewhere between 3 to 5 years from now.
Thank you so much. And one more question, that where we see the use of robotics by internal auditor in your future, which training programs and approaches can help the auditors to adapt and come up the speed?
As I said in my presentation, that we will be involved with the human brains, though we'll be using various data collection points or data collection methodologies. Finally, we will be participating along with the human brains. Typically, internal audit or any kind of audit is very subjective. And robotics and all come in picture only when something is objective. Either you do it or you don't do it. Likewise. But there will be a lot of subjectivity involved in internal audit, which will always remain. All of us know that if I see a particular observation, I might think something is maybe of a medium risk level, which Manojji as a CFO or the group internal audit head, he might see it as a critical stuff. Same observation, 4 or 5 panelists, we are sitting here, we can look at it in a different manner. So please understand that robotics and all will not be going to be there in the audit. Of course, whatever robotics are doing, the data generated around robotics, yes, we will have to churn it out at some point in time.
So I have a slightly, I won't say different, but slightly different kind of opinion. See, in my view, and looking at the kind of robotic process automation which I've seen, I don't see internal auditors using RPA even in next 5 years. But what I'm seeing is the organization adopting RPA to a greater degree. So we internal auditor would be auditing RPA whether they have been implemented appropriately. For example, let's say you will ask your vendors, you guys please mail me your invoices. So see, my invoice will come into emails. So this RPO will go there, do OCR, capture right kind of fields and put it into the system. So internal auditor will review the accuracy of this capture, that whether it is happening appropriately or not. They will also review that is someone can change the parameters of RPA. Now, to adopt RPA within internal auditor, I will take 10 samples and RPA tool will go pick up those samples, do something. It is totally, I would say, the cost deficient or cost ineffective method. And more we adopt RPA, more and more we audit RPA, more and more we would be strengthening the control environment in the organization.
Anything else, Himanshi?
No, sir. Thank you. Thanks a lot. Actually, I think almost questions you have already explained, and you have already the session was already very informative. All the questions are covered. Thanks a lot, sir.
Thank you.
Thank you.
So let's conclude this session. To conclude the seminar, I will not be long mentioning that it was a very informative session. I would like to thank Nandaji, Vishal, speakers for such wonderful session on all the behalf of all the participants also. So special thanks to Nandaji for giving me such opportunity to moderate this session. Hope this journey of learning continues. Thank you. Thanks for all.
Thank you, everybody. Thanks for joining.
Thanks to the participants. Thank you.
Thanks everyone. Thanks ISB. Thanks Milinji and thanks Amitji.
Thank you, sir. Thank you.
Thank you.